Ladies and gentlemen, I'm not going to tell you why I'm wearing a hat inside today, but what I will do is tell you my thoughts on the left translated cycle theory. Now, what is the left translated cycle theory? It's a theory that suggests that we see Bitcoin top out earlier than is cyclically normal to do so. So right now, the 4-year cycle, but you should know what it is by now. If you don't know what it is, the 4-year cycle is a date range trend on Bitcoin. It's on the screen right now. You can see the writing on the left-hand side of the screen is color-coded to the date range measurements, and just pause the video and take a look at that trend there. And you see the 4-year cycle says we're going to top out in around October 2025, so October next year. The left translated cycle means that we're just going to move that date to the left, right? So we're going to top out earlier than usual, right? Earlier than October 2025. That's what a left translated cycle means. And obviously, if we see a left translated cycle, that would mean the end of the 4-year cycle. The 4-year cycle is invalidated because we wouldn't see that top in October 2025. So what is evidence to support that? Is it strong evidence? We're going to look into it today. It's quite an interesting topic. So without further ado, we'll get into some exchanges and then we'll get into the actual video itself. BingX and Bitcoin are the exchanges for this YouTube channel. My referral links to those exchanges are down below. And with those referral links, you'll get access to a potential 5,000 USDT reward on Bitcoin and 4,000 USDT reward on BingX just by signing up with my link down below. On top of that, if you don't win that reward, you will get a guaranteed 15% trading fee discount for life on either exchange. So you're going to save money regardless. Get on these exchanges. They're very good. They're global non-KYC, which is a big deal nowadays with exchanges going KYC left, right, and center. They're both very low in trading fees to begin with, let alone with my links. And then furthermore, they've never been hacked before. So safe historically as well. Everything you want from an exchange, both of them are very good. Check them down below with my links. Let's get into the content. The people who believe in the left translated cycle and the end of the 4-year cycle have 3 major points to support their argument. Now, I don't think these points are completely asinine. Let me be very clear. I don't think they're ridiculous points. I do have points of criticism for them, though. I don't think they're perfect points, and I'm not willing to jump off the 4-year cycle bandwagon just quite yet. I'm also not willing to discount them, right? And I'm going to look into these arguments right now. I'm going to show you exactly what I mean when I say they're not as strong as some people think they are. So the first point is that Bitcoin has broken all-time highs before the halving. And this, of course, sounds like it is a massive deviation from 4-year cycle. It's actually not, though, but I'll explain this right now. So historically speaking, we've got the red vertical lines here, which indicate when the halvings occurred, and the yellow lines indicate the all-time high levels from prior cycle. Now, obviously, in the last 2 cycles, we saw the halving about 6 months before breaching the all-time high. This time we didn't. This time we breached the all-time high about a month before the halving, or a few weeks before the halving. So it was different this time. We moved up a lot faster than usual and a lot faster than expected, let's be honest, right? But it's very much worth noting that this is explainable. It's explainable by the fact that we had the ETF narrative and the ETF reality, quite simply. Okay, Bitcoin from this period here in March 2023 all the way right to April, or maybe even over here in June, we saw the longest period of time in Bitcoin's entire price history without a 25% correction. Think about that for a second. Now, why did that happen? It happened because the narratives were so exceptionally bullish that any move to the downside was eaten up by buyers immediately, right? We ran up on Bitcoin quite literally from September 2023 to March 2024. 190% in a matter of 5 months, 5 or 6 months, with no correction exceeding 25%. For the longest time in Bitcoin's price history, this was due to ETFs. We had the ETF narrative here, pumping the initial move, a pullback upon the release of ETFs, and then ETF inflows, which were major during that period of time, led the second move to the upside. It's explainable is my point. It's explainable, and furthermore, it was never actually a trend. There's no part of the 4-year cycle that relies on Bitcoin seeing a halving before the all-time high. There's no part of the 4-year cycle that relies on that. That's not a date range trend, okay? That's merely a data point that could have been a trend in the future, but never really got there because we only saw 2 data points instead of what we needed, which was the 3. Now, it's not a good thing. It's certainly not helping cyclical clarity. It's certainly not buffering the 4-year cycle, but it's not necessarily debunking it either. So like, yeah, Bitcoin, okay, is ahead of schedule, you could say, You could say it's ahead of schedule for sure, and I've said that in the past, and I actually do think it is ahead of schedule. But something that's worth noting here is that Bitcoin was very much ahead of schedule, and now it's gone sideways since March this year. It's gone sideways for about 140 days. So yeah, okay, it's ahead of schedule. It was very ahead of schedule back in March, but now after 140 days of sideways, we're actually not that far off schedule anymore. We're about 100 days off schedule, about 3 months off schedule. So it's not really the end of the world anymore like it was back in March, right? So the point is we can reconnect to the schedule even facing the deviation we saw here. So point one for the left translated cycle is that we broke all-time highs before the halving. I don't think it's a particularly strong point. It definitely doesn't help the 4-year cycle, don't get me wrong, but it's not like it's the end of the world. Point two, and this in my opinion is the weakest point, quite simply. Elliot wave theory. A lot of people know my opinions about Elliot wave already. People are arguing that we're seeing a 5-step wave pattern here. We saw step 1 or wave 1, wave 2, wave 3, okay? Wave 3 going all the way up. Wave 4 is this correction here. And then wave 5 will be the final move, followed by a bear market from there, meaning we break the 4-year cycle unless wave 5 lasts for the next year and a half. We break the 4-year cycle, quite frankly. That's what people are saying. Now, my problem with Elliott wave theory is so simple. Why is this a wave, right? It's a wave because people want it to be a wave because it fits their bias. There's no reason to consider this pullback here a second wave of the 5-step wave pattern, right? Because we didn't break the lows. We didn't break the macro level. So the people are arguing, we're seeing people arguing that we see wave 1, wave 2, wave 3, wave 4 is this correction here, and wave 5 will be the final move, blow off top, and then that would be the left translated cycle top. This does not constitute a second wave pullback. There is no break of the local low. This is my problem with 4-year cycle in general. If that is a wave, if that here is a wave, this over here, that correction should be a wave as well. People will draw Elliott wave theory to match their bias in whatever way possible. Elliott wave theory is not actual analysis. It is subjective analysis that should be used as supporting data at the most. And I'm not going to base my assumptions about breaking the 4-year cycle, the strongest date range trend in Bitcoin's entire price history, on Elliott wave theory, a subjective form of analysis. No way. So I'm not a believer in Elliott wave, even with the credit that I do give to the left translated cycle argument. I do think there is credit to give to it. Elliott wave is not part of that. So that's point two. Point three, and this is perhaps the strongest case you can make, right? It is the case from traditional markets, right? So people know, you'd obviously know, and if you don't know, I'm telling you now, that traditional markets and Bitcoin are very much interlinked. The same narratives and the same economic realities that drive up traditional markets drive up Bitcoin. Therefore, the same narratives and the same realities that drive down traditional markets drive down Bitcoin. Meaning that if traditional markets were to enter a bear market here, it would become likely that Bitcoin would do the same. That's what's historically true. So people are arguing that we're going to be seeing a bear market occur on traditional markets, and that will drag down Bitcoin. And they're arguing this bear market's going to occur very soon. In fact, they're arguing it's going to occur when we see the first rate cut. We are seeing interest rates cut in September this year, most likely. At the moment, that's what the data suggests. So 2 months from now. And obviously, if the rate cut leads to a bear market, obviously Bitcoin's going to get dragged down, and Bitcoin's not going to have a regular 4-year cycle. It's going to top out here or in 2 months from now or somewhere around there, and it's meant to top out in October 2025 as per 4-year cycle. So traditional markets going down here or around about here would lead to a left translated cycle on Bitcoin as well. Now, my problem with this argument is I can't necessarily debunk it, but I can't prove it either, right? Because this argument, again, is based on 2 data points, and it ignores the fact that this time is unequivocally different to the last 2 data points. So let's look into that for a second. Right now on the screen, you'll see in blue interest rates, and you'll see in dark blue S&P 500. So light blue is interest rates, dark blue is S&P 500. And you'll see that during the dot-com bubble, we saw interest rates dropping, and by the time interest rates dropped, the S&P 500 was already in a downturn. So you can say that interest rates dropping led to that S&P 500 bear market. The same story in the global financial crisis. But if you go back further in price history, you see that's not the case, right? every time interest rates dropped, that did not lead to these massive bear markets like it did in the dot-com bubble or the global financial crisis, at least not as clearly as the dot-com bubble or the global financial crisis. Looking into COVID drop in 2020, it also did not lead to that. In fact, it led to the reverse. Interest rates dropping led to a massive uptrend, and that was due to quantitative easing, obviously. But the point is, right, the whole argument that the S&P 500 is going to enter a massive bear market due to interest rates dropping is only based on 2 historical data points, which is fine. I mean, they are the 2 most recent viable data points. My problem is, this is the first time in Federal Reserve history where they have raised interest rates during a market correction. We were seeing a market correction here between 2021 and 2022. They raised interest rates during that market correction for the first time ever. We are in a unique market environment. We're in a market environment where the US national debt has exceeded the US defense spending. And the US defense spending is higher than the accumulative top 10 countries' defense spending in the world. In 2030, right, or 2032, I might be wrong on the date, the US national debt will have a higher cost to maintain than they reap from tax, right? This is a unique situation in all regards. To act like we're going to see a normal market environment as per what we saw in the dot-com bubble or global financial crisis is simply, we could see it, it's possible, but it's simply not a strong argument, right? It's only 2 data points. The most recent data point did not work, which was 2019. 2 data points is not a mathematical trend. And we've seen unusual rate increases during a market downturn. And on top of that, we're seeing a unique economic environment right here, a very big struggle coming up for the US in general, right? So I'm not overly convinced that the traditional market's going to act rationally to the rate drops. It could occur. I don't know. I'm in the dark on that matter, and I think everyone should be. I don't think it's clear enough to be too confident that we're going to see this big bear market upon rate cuts. It's just we just don't have enough evidence to suggest that at this point. It's possible. We don't have enough evidence to suggest it. Just like we don't have enough evidence to suggest that breaking all-time highs before the halving means the end of the 4-year cycle, right? So we've got 3 arguments for the left translated cycle right now. One of them, this one here, is weak, or at least it's uncertain, unclear. This one, the Elliot wave theory, is weak, that's for sure. And the traditional markets going down into a bear market is uncertain as well. So 3 arguments, and none of them are particularly strong. Am I saying it won't happen? I'm not saying it won't happen. I'm not saying we won't see a left translated cycle. I'm saying that it's uncertain, it's unclear, it's hard to know. And what I will say as well is that right now, nothing's happened in the 4-year cycle that is particularly unsustainable. Nothing's happened in the 4-year cycle that invalidates the 4-year cycle. As I said, we were very much ahead of the 4-year cycle recently, but we went sideways for over 3 or 4 months. We're getting back on track here. There's no clear definitive evidence that this 4-year cycle is broken yet. Looking at the DXY, if we want to look at DXY, we want to talk about traditional markets, we can do that all day. We can look at the DXY and see that the DXY is on the edge of dropping downwards massively when rate cuts actually come in. The last two times that occurred, we entered parabolic bull markets on Bitcoin. 2017, DXY dropped, Bitcoin went in a parabolic bull market. Same thing here in 2020, DXY dropped, Bitcoin parabolic bull market. If we're going to see the same thing right now, we will see a parabolic bull market on cryptocurrency. So you can make arguments from economic data all day long, but just know there's always going to be counter arguments. So my point in this video, and this is my conclusion, there's no direct evidence, no direct strong evidence to suggest that a left translated cycle is going to occur. It could occur. And I think, and here's where I put the but in the title, I think it actually might be best to act as though it may occur. Because if you act as though the 4-year cycle is going to play out, and then it actually doesn't, you're going to be stuck holding your bags all the way down into a bear market before you realize you were wrong. So even though the 4-year cycle is looking more likely at this point, it may be best to continue giving the left translated cycle respect, even though it might not be deserving of respect, because, in this scenario where you are wrong, you could lose a lot of money just by not being prepared for it. So prepare for the 4-year cycle, for sure. Prepare for the 4-year cycle. I'll be doing the same. Prepare for the left translated cycle, I should say. I'll be doing the same, but know that it's not a particularly strong argument. It certainly could occur. There's no doubt that this market cycle is unique. but there's also no clear evidence to suggest the 4-year cycle is actually broken at this point. So unfortunately, we're in a bit of an uncertain territory, but I hope this video gives you an idea of where people are actually arguing from when they claim left translated cycle over and over and over. They're not arguing from a very strong place. You know, again, if we were to see a cycle in which the 4-year cycle would break, this cycle is the cycle in which we've seen the most deviation, so this would be the most likely one. I'm not completely ruling it out. I'm just saying the fundamental arguments are uncertain at best. Guys, thank you for watching. I hope you enjoyed. Go ahead and check out the exchanges again. The Bitunix, the BingX exchange. My referral links are down below. 15% trading fee discounts with those links. Go ahead and check them out. And also go ahead and check out our VIP group on Telegram. We trade altcoins on VIP. 4 to 5 times a week, I give altcoin trading signals in video format. My buy zones, my exit zones, my stop losses. It's all there, guys. We've got a track record in a PDF document, fully transparent. You can go ahead and look it up there in that group down below. And we've also got VIP group chat. So you can discuss the market freely and openly with any other VIP member, and you can discuss the VIP trades as well to reap maximum profit there. Go ahead and check it out. We've also got the Crypto Academy. If you want to learn how to trade, we're currently doing a sale on our educational course. Now, when I say our, I mean myself and Megawell Crypto. We made this course in May 2022. It's been very good so far. Got about 150 signups to this course, so 150 students learning, and they've had great insights from the knowledge we offer here. We've got practical learning, visual learning, verbal learning, charts, diagrams, videos, worksheets. Everything you need is there. So guys, thank you for watching. Hope you enjoyed, and I'll catch you tomorrow.